Okay, let's carry forward this conversation then. And we have Rajesh Ravi, Institutional Research Analyst at HDFC Securities, joining in with us to discuss more on this topic. Thank you so much for joining in with us, Rajesh, this morning. And let's just take a quick look at what this means for these companies. 12% safeguard duty on flat steel products. What would be the benefit coming in for most of these steel companies in terms of the EBITDA per ton? How much are you expecting? And what would be the price hike that one would be envisaging coming in here?
Yeah, hi, good morning. Yes, this is indeed a positive move for the industry, which was reeling under, a falling steel price scenario for more than 2 years now. And given that the government has finally, suggested that a safeguard duty be imposed, this will obviously arrest the pricing decline, which we have seen in the past, few years. And we have seen some improvement in flats prices already in month of January and February, and we believe more to come through. Now, why this was important? Because from a domestic steel manufacturers, if you look at the Bloomberg estimates, FY25 EBITDA estimates for the for all the headline companies have been cut down by almost 30 to 35% over the past 1.5 years. And even FY26 estimates so far in FY25 have seen an erosion of almost 10% plus. So there was a continuous downgrade which were happening because of the falling prices. And this was despite the industry witnessing healthy demand in terms of domestic consumption. So with these safeguard duties and even the recent news flows coming in from China, whereby they are looking to cut down production, which would imply that exports from China would slow down and the flushing of the global market will reduce, and hence these two can lead to a positive bearing on the global steel prices. And that is where even if we look at a 2 to 3% incremental hike in steel prices, that is a good news for the Indian steel companies.
Right. Rajesh, give us a sense, number one, of what is the current pricing scenario as far as steel is concerned in the domestic market. What has been the trend over the last 3 months? Post imposition of this particular duty, what kind of a price hike do you anticipate? Could you give us a sensitivity analysis of how companies will be impacted and what are top picks in the sector?
Sure. If you look at the past 3 months, so what happened in Q3, we saw the longs prices recovering quarter on quarter while flats prices were under pressure. However, start of this quarter, the flat prices have recovered marginally by around 200 to 300 rupees per ton, whereas flats, flats prices that recovered by longs prices have been flattish to marginal. We can say they are flattish. Now, obviously, but in anticipation of bottoming out of scenario, but more will come through with this, the imposition, which is now almost certain getting implemented, and other countries also imposing such duties on Chinese exports. So, as far as the sensitivities goes, I would suggest that for almost every 1% increase in steel prices, your EBITDA could move up by 4 to 5% between players. And given that most of the Indian steel majors are all domestic sellers, most of their volumes are exposed to domestic markets where demand is strong, steel price uptick will have a positive bearing overall. So, if steel prices do recover by 2 to 3% point in FY26, that could lead to, incremental realization gain, that could lead to an EBITDA upgrade by 10 to 15% for the sector as a whole. And topics, we are very positive on JSW and JSPL.
Right.
Okay, thank you so much, Rajesh, for joining in with us and explaining us what this means, and the impact coming in on EBITDA on the positive front for these companies is very important. So thank you so much for that, Rajesh. But on that note, we're going to slip into a very short break, and after the break, we will still continue this discussion forward with Manish Sarda, Director at Sarda Group, joining in with us to talk to us about this.